It matters for a few reasons. Firstly, there is some relief with the interest that you'll pay. So on a $600,000 loan, if the rate cut is passed on to you as a borrower, there's $1,500 a year in interest savings. But probably the bigger reason that it matters is borrowing capacity. So for every 25 points that the RBA cuts the official cash rate, gives you another $25,000 worth of borrowing capacity. Now, borrowing capacity means purchasing power. So most economists are predicting that there's going to be another 2 rate cuts between now and Christmas. So with the 25 points from yesterday, that's collectively a 75 or 0.75% drop in rates. That equates to, for an average set of borrowers, to an extra $75,000 worth of borrowing capacity. That ability to pay more will put pressure on and create demand for housing and push house prices up. So my message to first home buyers is that it's going to get competitive as we go throughout the year, and most likely we'll see price growth off the back of that purchasing power that borrowers now have. Get in now if you can, don't wait is my message. You might be chasing the market where you're saving more deposit, but the price of property is going to continue to grow, and so you'll be continuing to chase that. So if you're a first home buyer, keep in mind it's probably not your house for life. So getting into the market at least will be growing with the market, and you can upgrade it at a later stage. Coming back to why is the rate cut important, there's 2 other things to consider too. One is if you are self-funded retiree, you are almost guaranteed to see that rate cut passed on in the savings rate that you're paid by the banks on your savings account. And it's most likely the 25 points will be passed on to borrowers in the new business rate that the banks are offering. However, as history will show us, banks won't always pass on that rate cut to their existing borrowers. And so those existing borrowers need to keep an eye on whether they actually do get a cut in their rate. And certainly as they go throughout the year, if we get 3 rate cuts equal to 0.75%, that's definitely worth considering whether your lender is actually still competitive and it's still the most suitable product for you. So my message would be keep an eye out whether it's competitive. Think about that within your strategy of what you're trying to achieve, because you may not actually see the rate cut passed on to you.